Hello friends, today we will discuss a very important case on section 36 subsection 1 clause III. Section 36 talks about the various deductions which are allowed from the income of the assessee, and particularly section 36 subsection 1 clause III talks about the deductibility of interest paid on borrowed capital by the assessee. The issue in the present case is that if the assessee has owned interest-free funds, that is the capital of the assessee on which the assessee has not to pay any interest is more than what the assessee has given interest-free loans to various parties or to the partners, and at the same time if the assessee has also taken some borrowed capital from other sources, so whether in that case the assessing officer can make the disallowance under section 36 subsection 1 clause III only on the ground that the loans which has been given is not for the business purposes or that are not for the business expediency or commercial expediency. This issue has been taken by Raipur ITAT in the case of Deputy Commissioner of Income Tax versus Avinash Builders, and this case has been reported in 114 ITR Tribunal at page number 324, and the date of the judgment is 15th May 2024. In the present case, the assessment year is 18-19 and the assessee is a partnership firm who is dealing in the business of real estate. In the present case, the assessee do have sufficient own funds, and at the same time the various amounts were given to the partners, and in some cases this amount given to the partners was even in the form of overdrawn by the partners, and at the same time there were some interest bearing funds also in the balance sheet of the assessee. The assessing officer was carried away by this interest bearing funds, and whatever the interest has been paid by the assessee, the assessing officer tried to relate that interest bearing funds with the non-interest bearing loans given to the various partners. The plea of the assessee was that whatever the loans has been given to the partners, that are from the own funds of the assessee on which the assessee has not to pay any interest. But the assessing officer, on the basis of conjecture and surmises, disallowed the interest paid on the borrowed capital. When this matter was taken away by the assessee to the CIT appeal, the CIT appeal was convinced with the submissions of the assessee that the interest which has been paid by the assessee is not related with the amount given to the partners, and the own funds of the assessee were sufficient to cover up the interest-free funds which have been given to the various partners of the partnership firm. So the revenue took up this matter to the tribunal, and when the tribunal heard the matter, the tribunal was also concurring with the view of the CIT appeal and said that in the present case, the observations of the CIT appeal is well supported by the corroborative evidence. The tribunal said that in the case of the assessee, in the earlier case also, it was held that the assessee was having sufficient own funds, and out of those own funds, the amount has been advanced to the various partners. Even in some cases they were overdrawn, and in those years the disallowance under section 36 subsection 1 clause III was deleted. So following the concept of consistency also, in the present case also, the disallowance under section 36 subsection 1 clause III is unwarranted. The tribunal further said that in the present case there is no doubt that interest free funds are sufficient to cover up the amounts withdrawn by the partners. So the tribunal deleted the addition made by the learned assessing officer and upheld the order of the CIT appeal which has given relief to the assessee. At the end of this video, once again, I am repeating the name of the case. The name of the case is Deputy Commissioner of Income Tax versus Avinash Builders, and this case has been reported in 114 ITR Tribunal at page number 324, and the matter has been decided by Honorable Raipur ITAT on 15th May 2024. Thank you, friends.